Hello and welcome. Thank you for joining us for today's talk hosted by the Institute for Innovation and Public Purpose as part of the WowWar event series, Who Owns What and Why? This event series by the Omidyar Network. Before we start, here is some helpful information. Firstly, to check that you can all hear me, please raise your hand by clicking on the hand icon at the bottom of your screen. Thank you very much. There is a Q&A box located at the bottom of your screen where you can submit questions to the speakers. We'll do our best to answer as many as possible, although time may be limited. The chat function for this talk has been turned off. If you would like to share tweets or follow the conversation, please use the hashtag IIPPWowWar. Thank you.
Hello, everyone. Welcome to IIPP's WowWar event, Who Owns What and Why? This is the third event in the series. We're looking at value creation and value extraction and ownership dynamics in capitalist economies. The series kindly supported by the Omidyar Network. My name is Josh Ryan Collins. I'm Head of Finance and Macroeconomics here at IIPP. I've written a couple of books on housing and its relationship to the wider economy. And today we are discussing housing. The title of the talk is The Global Housing Crisis and the Myth of Home Ownership. Now, here in the UK, we've just experienced a 10% annual fall in GDP, which constitutes the worst downturn in 300 years since the Great Frost of 1709. Now, can anyone imagine what might have happened to the housing market during that period? You might expect that house prices may have fallen with such enormous collapse in incomes and growth. Quite the contrary. In fact, house prices symmetrically have risen. They've grown also by 10%, which is actually the fastest rate of house price growth in this country since 2007, the peak of the global financial crisis, peak of the housing boom just before the global financial crisis. So we have clearly a disconnect between our housing markets and the rest of the economy of a quite extraordinary nature. Now, you might think this is just a UK problem, but it's not. In fact, we've seen rises in house prices in nearly all high income economies. It's an average of around about 5% growth in house prices since the COVID crisis began a year ago. The US has experienced an 11% average increase in house prices, and in New Zealand they've managed 22% increase. Now, of course, the real problem here is that not everyone owns a house. If everyone did, then we could all sort of celebrate. But of course, there's been a fall in the rate of home ownership in high income economies. It's fallen down from highs in the early 2000s, and younger people in particular are in a situation where it's almost impossible for them to be able to afford a house when they first want to buy one. And this is not just a high income economy problem. The world is facing a housing affordability crisis where price is currently more than 3 times median family income, which is the standard definition of affordable, in more than 90% of 500 cities globally. 1.8 billion people worldwide lack adequate housing, and over 1 billion are living in informal settlements, according to the UN, with approximately 150 million people homeless. Thus, the housing crisis is one of the greatest threats to modern societies and economies, but it is also a highly complicated problem, and I've spent the last 10 years researching it, and I'm very pleased for that reason that I'm not going to be the one trying to explain to you what's going on. Instead, I'm joined by 3 fantastic guests today who will join me to discuss the housing crisis. And I would like to start by introducing Leilani Fahar, who is the Global Director of The Shift, an international movement to secure the right to housing. And she was also former UN Special Rapporteur on the right to housing for the last 7 years, where she raised the issue of housing affordability and in particular housing financialization onto the international political agenda, did a fantastic job. She launched the Shift in 2017 with the UN Office of the High Commissioner for Human Rights and United Cities and Local Government. And she works with multi-level stakeholders around the world on this agenda, including several city governments in North America and Europe. So welcome, Leilani. I'm also joined by Brett Christophers, who is professor in the Department of Social and Economic Geography at Uppsala University in Sweden. Brett is a political economist and economic geographer and the author of numerous books, with his most recent being the widely acclaimed Rentier Capitalism, Who Owns the Economy and Who Pays for It? So perfect book, I think, for this series at IIPP. Delighted to have you with us. He's also written widely on the housing and land economy and the problems there, including a book in 2018 called The New Enclosure, The Appropriation of Public Land in Neoliberal Britain. Finally, I'm joined by Sebastian Kohl, who is senior researcher at the Max Planck Institute for the Study of Societies in Germany. Now, Sebastian is a true expert in home ownership. He's written very widely on the ideology and political economy of home ownership, as well as on housing finance and also on insurance. And he's written a book called Home Ownership, Renting and Society, Historical and Comparative Perspectives, which was published in 2017 by Routledge. So 3 fantastic guests with us. And I'm going to start off. What we're going to do is have about 40 minutes or so of questions, and then we'll be opening up for a Q&A with the 200 people we currently have in the audience. Thanks so much for joining us. And I'm going to start with Leilani. Leilani, I want to bring you immediately really to the facts I spelt out at the beginning of the talk around this disconnect between what's happened just in the last year, really, between the housing market and the wider economy with the COVID pandemic. And I suppose what I'm interested in is what we've seen in the last year symptomatic of wider underlying problems, or is it something particular about the virus that has driven this crazy sort of bubble in house prices relative to the rest of the economy?
Well, first of all, thanks for having me here. And I feel I'm in such esteemed company. My gosh, all these book writers. I am not yet a book writer yet. I think it's really interesting to talk about this from the point of view of disconnect. I'm not sure there's a disconnect. I think this is a package. When economies fail and when everyday people are suffering, housing does very well. I think that's symbiotic. I don't think it's a disconnect, actually. I think that's our structure, and that's what we need to dismantle. That's what I would say. What role does the pandemic play in all of this? Well, obviously, there was a global housing crisis that predates the pandemic. You, Josh, described it so well. Some of the various elements, homelessness across the world, increasing in most countries, including in the most developed and the most affluent countries. So, those things go together. Housing, the value of housing as an asset increasing and increasing homelessness. Those are also symbiotic, not a disconnect, very connected. And affordability issues, as you said, across the world, 80 million people in Europe living right now in house, burdened by the cost of housing. 10 million people in the United States right now facing potential eviction because of arrears in rents, unable to pay their rents, for example. Evictions and forced evictions have been part of the landscape for a very long time. predating the pandemic and et cetera. So, I mean, I could go on. There was definitely a housing crisis before the pandemic. What the pandemic has done is, one, it exposed the crisis a little bit more, right? So when the World Health Organization and governments around the world realized that there was really only one, at the time, there was no vaccine. So the only prescription against COVID was to shelter in place, stay at home, wash your hands, physical distance. Those were the three things. And that then exposed, oh, shoot, what do? We've got people living in homelessness. They don't have a home in which to shelter or stay. It exposed how so many people were a paycheck, if they get a paycheck, away from housing precarity. I mean, within 1 month of the pandemic, people were having trouble in the global north paying their rents. So the pandemic kind of blew it open. Informal settlements, there's no access to decent water, sanitation services. That became really apparent in the pandemic. But the other thing that happened in the pandemic was governments and central banks in particular, I should say, central banks keeping interest rates really low, quantitative easing, and creating this, they help to create a very fertile ground for the ongoing financialization of housing. So allowing the big financial actors even more access to cheap or free money, and the ability to continue to dominate the housing landscape, which is something, I should have mentioned, that is something we saw prior to the pandemic. Of course, the pandemic also makes it fertile ground for these actors, because there is a lot of debt out there to be bought cheaply right now. There are a lot of, so you've got cheap money and cheap assets, basically, and debt to be purchased. And that is just fertile ground for this. And we're seeing it. I'm starting to track all of the different acquisitions by private equity firms and asset management firms across the globe. And they are on a spending spree, not just with the usual multifamily buildings, but also with new builds. So those homes that are being actually built for first-time home buyers, new homes that are being built, those are being acquired by big capital. In Ireland, there's a recent case that many of you will know about, the 135 homes outside of Dublin in Maynooth that were purchased by Roundhill Capital. And they are going to be converted into rental accommodation. So they were intended for first-time home buyers, and now they've been purchased by big capital and will be converted into rental housing. So that's my answer. I think I've gone at least 5 minutes, so I'm going to stop there.
Thanks, Leilani. I'm just going to actually ask if either Brett or Seb wanted to come in specifically on this question, because I think what I'm interested in particular is why we've seen house prices go up when people's incomes have fallen. So I wonder, Brett, if you've got some thoughts on that. I mean, is it driven by this financialization that Leilani's talked about, or is there other things going on there as well?
Well, I guess the answer there is that is to say that, I mean, the way you put it, why prices gone up when people's incomes have gone down. I guess the answer is that prices have gone up because people's incomes haven't gone down, at least the people that are buying the houses. People's incomes have either, those that are in the market have either stayed the way they were, or they've gone up and people haven't been spending as much money. They've been at home. So people are using that money to take on even bigger mortgages and push up house prices. I think is obviously a big part of the story. Combined, I think, with the evidence suggests banks pushing the envelope in terms of lending behaviour in much the same way that they were doing 15 years ago. So I think the answer is that this is part of the wider story of the uneven consequences of the crisis, right? Which is that for a significant section of the population, it hasn't really been a significant crisis, except obviously in certain ways in terms of the psychological implications of lockdown and so on. But in strict economic terms, a lot of people have been doing better, and the housing market is reflecting that.
Thanks. So to come back to you, Leilani, the housing, we focus a lot, of course, on our own problems in the global north, but you've done a lot of work, in particular in the global south, and I want to just explore the extent to which the fact that house prices are rising in lower income economies, and the extent to which this is driven perhaps by the actions of actors outside those economies, in particular international financial institutions, and the extent to which, is it a problem that can be dealt with domestic policy in those countries, or is it a broader international challenge that agencies like, I don't know, the International Monetary Fund or the World Bank also need to be dealing with?
Yeah, so I don't think we can divide the world in terms of global south and global north, where financialization is concerned. The divide seems to be in terms of peripheral economies, you might say, and so you end up, financialization is a very mixed thing. I mean, we see it, a hugely financialized market in Lebanon, in Beirut, right? Mm-hmm. So what's going on there? You see a hugely financialized market in Puerto Rico, right? The state that isn't a state in the US that is, very, very poor. And so that divide doesn't work, but what you said does work, Josh, which is the transnational aspect of financialization. These actors are multinational, and they just go where they can make profit and where there's a stable enough market where they think that they can get a return on that investment, and where their investors will go with them. So there are those pressures in some of those southern economies, for sure, those outside pressures. A lot of southern economies also have had imposed on them, and I'm interested to hear the other speakers talk about this, because they'll know even more about it than I do. But a lot of southern countries that actually, they're struggling in terms of their economic system. And so what gets introduced is a mortgage-based housing system. And you would think that's about housing, and they'll often call that mortgage-based housing system, they'll even call it social housing, and they'll, come up with schemes to make it available, not to the lowest income people, but to lower income people. But my understanding is that's really a financial move on the part of those governments and countries. It's a way of kickstarting economies and creating a debt-based economy that allows for more infusion of cash into the economy. And so I can't say that I understand how those mortgage-based systems now are functioning at high levels, unless it is, as Brett said, some people are suffering more than others in this pandemic. And so, for example, you take a country like Egypt, they have a culture there. They don't have a culture of saving money in the bank. They have a culture of acquisition. So I'm a family, I'm going to buy 5 units for my 2 children and their children. And those are going to sit empty for a long time. And that, of course, helps to escalate prices within a market. So I think there's some of that going on, but I'll leave it to some of the experts on home ownership who might have looked at this in the Southern context.
So thanks, Leilani. I'll move on to Brett then. Now, Brett, you've in your academic research have been quite critical of the concept of financialization, suggesting it's a bit of a vague, amorphous concept, and you've instead talked about the rentierization of capitalist economies, which is the title of your your new book. I mean, can you explain to us what exactly you mean by rentierization and why it's different from financialization, and you know how that helps you better theorize what's going on in the housing market, maybe?
It's quite a big question. Okay, so to say the first part of that, so rentierization versus financialization, they're both kind of ugly terms, but I guess in very simplistic terms, what I mean by rentier capitalism is a form of capitalism in which incomes and also economic actors are really dominated by incomes generated by virtue of the control or ownership of scarce assets of some kind. And I guess the argument I make is that the UK is kind of this quintessence of a rentier capitalist society, insofar as the UK economy is dominated by these rentier type sectors, from natural resources to pharmaceuticals based on patents and intellectual property, to real estate, to finance, and so on. And the relationship there to financialization is to say, many people who talk about financialization talk about the growth of the financial part of the economy in recent decades. And the very simple argument I make is that, sure, the financial sector has grown in importance, but also so have various other very important sectors as well. And what they all have in common is that they are structured around the monopolistic control of scarce assets of some kind. Financial assets being one type of important asset, but only one. And so moving onto housing, if rentier capitalism is about the privileging of asset ownership and hoarding of all types, and about the kind of policy mechanisms and governance structures that encourage that privileging and make asset ownership and control pay, then I think what you would argue is that in countries like the UK, but not only the UK, which have housing affordability crises, I think there's a very strong argument that owning housing, either as an owner-occupier or as a landlord, has been made to pay. We can trace the policy mechanisms and the discursive shifts that underline that privileging of asset ownership and control in the housing sector as we can in other sectors. And if the ownership of housing as either an owner-occupier or a landlord has been made to pay, the result of that is what we see, which is constant upward pressure on prices. And I think the only thing I would add there is that I noticed that your title for the talk included the notion of the home ownership myth, the myth of home ownership. And of course, it was Jim Kemeny who coined that notion with his book, I think 40 years ago, The Home Ownership Myth. And he actually was based here at Uppsala University, funnily enough. And his argument really was that what he meant by the myth of home ownership was that it was a myth that home ownership is is a superior form of tenure to renting. He said it's just a myth that by its very nature, home ownership is a superior form of tenure. It's made to be a superior form of tenure through very politically motivated policy decisions and around things like taxation and other things. And that, I think that if he was here today, he would argue that all of this is completely understandable, insofar as in all the countries where you have massive home ownership and home affordability crises today, home ownership has been privileged through all sorts, through decades of policy mechanisms that have made it appear to be a superior tenure to renting, and renting has been devalued in all sorts of other ways. And I think that's part and parcel of the rentier capitalism story that I try to flesh out.
And in another one of your books, the New Enclosure, you talk in particular about the privatization of land, of real estate. Part of which I guess was the right to buy scheme of Margaret Thatcher. I mean, how important is privatization in explaining this sort of housing crisis that we face? I mean, is it also, is that just a UK thing, or is that a wider sort of problem?
I think, for sure, it's a much wider phenomenon. Where I am in Sweden, privatization of housing has occurred on a significant scale in various different ways. In Germany, where Sebastian is, it's occurred to a very significant extent as well, with lots of the private equity institutions that Leilani talks about having been involved in the privatization of housing in Germany. So it's a huge part of the story. And in the UK, which is where the book, The New Enclosure, is about, it's a fundamental part of the story. So housing land was constituted a significant proportion quantitatively, if not in value terms, if not necessarily in aerial terms, of the land that was privatized. And I think one of the interesting ways of looking at this is what the long-term consequences of right to buy have been. And I think a lot of people would say, well, surely the biggest consequence of right to buy in tenure terms has been a shift from rental to owner occupation, but it's actually not true. If you go back to the beginning of right to buy, home ownership rates in the UK were something like 50 to 55% maybe at the end of the 1970s. And what are they today? About 60%. So actually, after 4 decades of right to buy, the home ownership proportion has actually only gone up a relatively small amount. It obviously went higher and it's come back down. The big shift has been a shift from social rental to private rental. So if you go back to the end of the 1970s, I think less than a quarter of the private rental sector's share of housing in the UK was under a quarter. Today, it's over a half. So the biggest consequence has been this move from social rental to private rental, because much of the housing that was privatized under right to buy, even though in the first instance went to owner occupiers, it's ended up in the private rental sector. I think now around about 50% of the housing that was privatized under right to buy is today in the private rental sector. And funnily enough, that leads to affordability issues, because rents in the private rental sector are on average, I think, about 90% higher, so almost double rents in the social rental sector. So if you move housing from social rental to private rental, rents by their very nature become more unaffordable. So I think privatization in that and other ways has been a massive part of the story in the UK, but not only in the UK.
And you make a sort of broader argument in that book that this privatization of land and real estate is not some sort of quirk of history. It's actually quite fundamental to the sort of neoliberal project, as it were. I mean, can you just elaborate a little bit on what you mean by neoliberalism and the centrality of housing to that?
Yeah, it's another big question. So yeah, I guess one of the things I try and do in that book is sort of push back a little bit against accounts of neoliberalism that focus on issues around things like the privileging of competition, for example, and say, well, maybe, but actually we need to place privatization much more centrally into the story of neoliberalism than it perhaps has been, certainly in the UK's case. But obviously also the privileging of market mechanisms, and I think you could argue that if privatization has been a key factor behind the housing crisis that the UK has today and other countries have today, then market privilege, the privileging of markets, as another component of neoliberalism, has also been very, very important as well. In other words, the commodification of housing. It's turning into something to be distributed through market mechanisms. And I think that's true both on the demand side and on the supply side. Your own work has obviously pointed to the massive impact of the liberalization of mortgage markets on the demand side in terms of inflating demand and pushing up prices in all sorts of different countries, but also on the supply side as well. People think of markets on the supply side, they think of lots of small, very competitive producers, but the reality of housing and land markets in countries like the UK is not like that at all. The market's an oligopolistic market. We have a small number of very big players. It's true in Sweden as much as it's true in the UK, who drip feed land from their enormous land banks onto the market precisely in order to maintain prices. So we have market mechanisms, but we have market mechanisms that actually look nothing like kind of the classical economic textbook pictures of market mechanisms when it comes to housing and land markets.
So what you're saying is that oligopolistic cartel-like development companies have no real incentive to build out at a rate that would actually push down house prices because they're looking at their quarterly returns, etc.
Yeah, no, that's absolutely right, and that's exactly what I'm saying. And if you look at, if you look what happened to the land that, if you look what's happened to a lot of the land that the big UK developers/house builders have bought from the government in recent years with the public land disposal programs, it's just ended up in their bulging land banks, and they're building on it at a woefully slow rates. And I think even the Oliver Letwin review, which in many ways was a very kind of establishment review, pointed out this fact that they were drip feeding the market.
Okay, Sebastian, I want to come to you and focus in on this home ownership ideology, the home owning democracy, which you've written about in some depth. Can you give us first a bit of a sense of the sort of historical development of this concept, and then sort of how it's become so embedded in the political economy of so many countries? And I guess the other question is, why are politicians still so wedded to it, even when the model itself is clearly not working, in the sense that, as Brett said, the rate of home ownership's been falling in many advanced economies, including those that seem to be most attached to the concept, like the UK and Australia and the US.
Yes, right, Josh. So first of all, what is home ownership ideology, or the ideal to basically have home ownership as the main tenure? I think a less ideological definition of it is simply that there is the will to distribute housing, or perhaps underlying land, as broadly as possible. And the history of this political ideal is quite a colorful one. So you have, on the one hand, very conservative ideas to distribute homes and land more equally each time that revolutions or wars take place. So in many veterans programs up until the 20th century, of course, you have this idea that veterans coming back from the war need basically roots to stabilize themselves. But you also find this idea on the radical left even. So when you look at debates in the French Revolution, then, Babeuf had this idea that a society of small landowners would be more stable. And Thomas Paine's idea of a basic income is also tied to this. So it has both these origins. In the great industrialization and urbanization of the 19th century, however, it was mainly conservatives and their think tanks who brought this idea on the political agenda, with employers, particularly in mining coal regions, popularizing this idea that workers can be basically convinced to not join the revolution once they have their single family house with a nice garden attached to it. Right, and ever since the 20th century, it is a bit easier to write the history of this home ownership idea, which was so conservative in the 19th century, because political parties in modern democracies have expressed themselves in favor or not in favor of home ownership in their party manifestos. And party manifestos is a nice source that you can, have for like 2 dozens of countries ever since the start of the 20th century. And I looked at about 2,000 of them in 19 countries to see which parties actually defended home ownership. And something that you find there is that Kameni's home ownership myth is particularly Anglophone one. So the Anglophone two-party systems two parties rarely have a party manifesto without a strong preference for home ownership. But you also find it actually in some Scandinavian countries. I was actually struck by this because in the German-speaking countries, I myself come from Germany, this has not been the case. So there you have roughly 50% or so of party manifestos mentioning home ownership at all. Why is this? Because in these multi-party systems, the center-left parties, so the Social Democrats, have traditionally not favored home ownership. So they really drive the country differences, and they had alternative ideas about how to best basically house the urban worker population, which was basically mainly in social housing and in private rentals with a strong tenancy legislation. That was a bit the continental alternative. So now you see that home ownership rates are falling. I pasted in the chat these links about home ownership rates throughout the world and social housing rates across the world. So why is it that parties nowadays still are so attached to home ownership, even though perhaps many social scientists would say that it is not the best way to organize the housing market? I think looking at these party manifestos there's simply a point of no return. So once the median voter is a homeowner and depends a bit on the housing wealth, for instance, for his or her private pension, then it is hard for particularly large parties to not defend home ownership. I also found that there's a certain party competition around home ownership. So in countries where other parties defend home ownership, it is hard for a party to not embrace this option. And in these two-party systems, in Anglophone countries, I think this partisan competition dynamic is particularly strong, which is why in multi-party systems, there's still an alternative for parties. So the Green parties, for instance, are the least home ownership-friendly parties in all countries.
Interesting, yeah. And just going back to Germany, because Germany does stand out really, not only that it has a much lower level of home ownership, but it has actually been successful until quite recently in moderating the growth of house prices relative to other countries. I mean, what can you give us some insight into why home ownership never really taken off in Germany, and is that changing as well, because the rate of home ownership has been increasing, and also we've seen sort of quite rapid house price increases in some parts of the country.
Mm-hmm. Yes, so when you look at the graph in this tool that I shared, you see that indeed German home ownership rates also increased over this long 20th century. But over the last about 15 years, they have not significantly increased. So they are at about 45% of households, which means that private rental has never basically lost basically the status of being a real alternative, including for the middle classes. So in the large German cities of 500,000 plus inhabitants, for instance, the average home ownership rate is about 26%, meaning large parts of the middle classes, including their student children, depend on the private rental market, which, I mean, you see completely changes the politics here. Rent prices are the politically sensitive price and not really mortgage rates. So why is it that this is, if you want a stable equilibrium? So when you look at, for instance, the US and the German home ownership rates, they've had a 20 percentage point difference across the last about 100 years. So it seems to be an alternative model of housing the population. So one factor, I think, is just institutional inertia. In the mortgage sector, for instance, it is quite complicated actually to get a mortgage in Germany for lower income people. There are high deposit requirements, and there's a lot of resilience in just the mortgage system. A second institution, which is, I think, important to mention also in the comparison with Anglophone countries, is private rental regulation. So a colleague of mine has coded actually a private rental regulation. So rent control, security of tenancy, for instance, in I think almost 100 countries now since 1914 when it was first introduced. And when you look at these data, what comes out of it is that the Anglophone countries are really special in basically having a hire and fire rental market. So prices can be set as the landlord wants, more or less. There can be evictions with very little rights for tenants. And this is completely different when you look at, for instance, the German-speaking countries, which also have not fallen into the trap of, let's say, over-regulating it, such that the rentier that Brett was describing loses interest in investing in private real estate.
So the rental market, the strength of the rental market, you're saying, can create a sort of path dependency, as it did in Germany, which means the larger political system actually gets attached to that sort of tenure and then reinforces it, and then the opposite has kind of happened in Anglo-Saxon countries.
Right.
Oh, sorry.
Yes, Leilani, do come in.
I just wanted to lob some things into the conversation and see where they go. One thing I wanted to pick up on what Sebastian was saying about governments and how and why they become wedded to home ownership as a kind of political platform or a framework. And I mean, we can't forget that for some countries, it has become so integral to the functioning of the economy of that country that to back away from it, I mean, it's so related to how people spend, right? So you get a mortgage for your home, and then that mortgage enables you build equity. That mortgage enables you to leverage more capital, which you then use to send your kids to university and to buy a new car. And so, I mean, it becomes all, part of, and Josh, you've talked about that in your own book, as a matter of fact. And I think, when I look at the country where I live, Canada, if you look at housing, real estate, construction, et cetera, it's like 20% of Canada's GDP. So and home ownership is obviously, and if you look at Sebastian's amazing graphs that he put in the chat, you can choose which countries you want. It's pretty amazing. So I just chose Canada just to see, and you'll see home ownership rates in Canada are very high. And so, we have a system that's really embedded in home ownership in so many ways, right into the political platforms, as Sebastian said, because the developers and those on the real estate side have very a large amount of influence with political parties in our country. So just to say that there's a lot going on there. And then if you look at banks themselves, something I've tried not to do too much of, but found myself looking recently at some banks, and how much mortgage lending are they doing as their business? In some countries, it is disproportionately what they're lending for. So they're not lending businesses to grow, to create more employment, research and development. They're lending for mortgage homeownership. And so to then get banks to change their business activity it's a structural problem. It's a difficult structural issue to get at. And there aren't so many, frankly, advocates who are looking at that, at least in the countries that I looked at. And lastly, I'm going to lob in, I think there's so much, like if we want to talk about the myth of home ownership, what I'm finding recently, well, since I was rapporteur and more recently in the pandemic, whether we want to talk about financialization or renterization, I don't care about the language so much, but the actors I do care about. And the big financial actors are using the fact that they are converting single family homes into rental accommodation to say, everyone's complaining that we're a homeowner-based society and that we need more rentals. So look at what we're doing. We're taking foreclosed homes and we're turning them into rentals. And this is like Blackstone, largest private equity firm in the world, for example. So, you know, pat me on the back, or look at the new move into new builds that these big financial actors are doing. So they are purchasing homes that governments wanted to make as home ownership. They're purchasing the new builds, and they must be getting incredibly good deals on those. And right, because they're for first-time home buyers, there's often big, amazing packages that can be done around cheaper mortgages if you buy en masse, et cetera. And so, and now they're putting them out as rentals. And so I just want to, and then at the same time, I mean, I believe in rental. I believe in multiple kinds of tenure. Absolutely. That's the only way forward, I think, and more interesting, creative ones. But if we look at rental and look, and Sebastian knows far better than me what's happened in Berlin, where you get the Vonovias and the Deutsche Wohnens really putting pressure on what tenant protections look like in the city of Berlin, for example. What can they look like? And so we just have to say that there's so, whatever we want to call it, those actors are putting tremendous pressure on our housing systems. And I think we and I wasn't saying anyone was ignoring them, but only to say I do feel attention has to be paid, because they are really, it's one of the most unregulated sectors in terms of you know, states or governments taking a stand and saying, you know, this isn't good for our economies, this isn't good for our people, this isn't good for our tenants. That's my law.
No, that's great, because I wanted to move us on now to, you know, what kind of policy reforms we need to actually improve the situation. And so you've sort of started that journey, I think. Can I just follow up there with you? I mean, from your experience, your 7 years with the UN as Special Rapporteur on Housing, I mean, what were the policies you tried to push to alleviate some of these issues?
Yeah.
And you know, happy for you to talk about, you know, homelessness and issues in the global south as much as what, you know, the global north. But what were the policies you pushed, and what were the challenges you faced in actually creating change?
Well, there's, you know, if you were to ask me, how has this all unfolded, Leilani? Why do you think this is the way the housing world is the way it is? I have a singular answer, and my singular answer is that housing hasn't been understood or implemented as a human right fully by any government. And it is their responsibility. After World War II and the atrocities where it was understood that the world had lost its moral compass, countries from around the world came together and they formed the Universal Declaration on Human Rights. And since then, there have been a whole bunch of international human rights treaties that governments from around the world have signed on to and committed to, creating legal obligations. And those legal obligations include, right back to the UDHR in 1948, the Universal Declaration, include the right to adequate housing. And over time, it's become, you know, written about and talked about, and what does it mean? And I certainly spent a lot of time in my years as rapporteur trying to help governments understand, what does this mean? That this is a way of governance, this is a way of doing housing. We're not there yet. I have seen a tremendous amount of movement from city governments, even social movements that are now using human rights language and human rights principles to try to push their governments, and even national governments. My own government has had, the government of Canada, for a very long time resisted the idea that housing could be a human right like other human rights. Like, yeah, you know, the right to freedom of religion, the right to free speech, the right to be free from torture. Yeah, those are human rights, but housing? Yeah, not so much. They completely moved the dial. Now we have legislation that recognizes housing as a human right, but they're still not fully implementing it. And that's kind of where we're at. I wrote a thematic report for governments, really it was for governments, guidelines on the implementation of the right to housing. So a roadmap, this is what you'd have to do. And it includes addressing things like homelessness, but it also includes things like addressing what I do call the financialization of housing, although I have a very narrow definition that I wonder if Brett would accept as being a little more concrete and less vague than others. But I really think, I mean, I'd like to just give, I don't want to take up too much floor space, but I'd like to just give one example. Homelessness is the easiest one because it is so obviously a violation of the right to housing, right? You're living in homelessness but to get people to understand how that's a violation, most people would say, well, a lot of homeless people, they have psychosocial disabilities, they're drug addicts, alcoholics, they don't have employment, they don't have money. Of course, they ended up homeless.
Mm-hmm.
But if you say to yourself, well, when housing is a human right, that means governments should do everything that they can, provide all the supports that are necessary to ensure that a person wouldn't be homeless. And that's what makes it the violation. The failure of governments to do what they need to do to ensure that people don't fall into homelessness. And so that's what I've been working the hardest on, is it is a complete change in mindset so that tenants are no longer just, political and badgering and shit disturbers, excuse the expression, but that they're actually making human rights claims when they say we need rent freezes and rent caps and long-term leases. Those are human rights claims. When a homeless person pitches a tent in a park, that's a human rights claim. They're saying, I need the right to housing. And they're saying that's their form of expression. So that's been what I've been advocating. And I do see traction because the pandemic has helped a lot, because governments were caught like, whoa, what's going on here? Oh my gosh, I have homelessness at my doorstep. I have to solve it right now, or else my entire population could contract this deadly disease or virus. And so there's been movement where governments, especially city governments, are like, okay, give me a new framework, give me a new way of ensuring the safety of my population. So that's the big sort of macro approach.
Okay. Brett, what are your thoughts on this sort of rights-based approach to the problem that Leilani's outlined there? Because obviously, the neoliberal program, puts quite a lot of emphasis on the individual as the key object around which society, needs to operate. I mean, do you think there's something in that, or do you think there's broader structural challenges that it might not be able to overcome that kind of approach?
I mean, I've never really thought about it explicitly from a rights-based perspective. I mean, I guess the only comment I would have there is that I think, Leilani's absolutely right. I mean, if you look at what housing, how the notion of housing rights has changed under kind of neoliberal orthodoxies, I guess what you would say is that if it were the case that once it was seen to be true that one had a right to adequate housing, I think today what you would say is that the kind of the hegemonic view would be that you have not a right to housing, but that you have a right to buy housing, and that's a pretty fundamental shift. Not least in terms of what it means in terms of government policy, because instead of government policy being in the first place to help you secure access to housing, then government policy shifts instead to being about helping you to buy housing rather than helping you into housing. And we can, and we've all seen what the ridiculous consequences of that are, which is just to, as you all know, which is just to inflate the bubble still further, pouring further fuel onto the fire. Which is the last thing that anybody wants. I mean, as I see it, if we think about the housing crisis Obviously, it comes in various different shapes and sizes, and it manifests in different ways. But the way you've kind of framed it to a significant extent, Josh, for this session is in terms of affordability, and in terms of the fact that housing is just now in so many places absurdly expensive. Absurd. I mean, it's bonkers, right? I mean, I remember living in London when I last lived in London, which was around 1999. I remember friends sort of saying to me then, "Oh, you know, should I buy a house?" And I was like, "No, don't buy a house. The market's overheated. It's about to blow up, and it's all going to go pear-shaped." And that was in 1999. To me, I was convinced then that everything was ridiculously overpriced, and those prices obviously look almost quaint by comparison with today. So prices are absurd. Prices should be like maybe 30, you know, in a place like London, 30% of what they are, or something like that. It's bonkers. So something has to be done, to me, and this is a very simplistic way of viewing things, to make owning housing less attractive. Frankly, I think that's the bottom of it. And as I think I kind of hinted at before, and as Sebastian's comments have also alluded to, that's always a relational thing, right? Because home ownership is not the only tenure. So making home ownership less attractive is by its very nature also about making renting more attractive. And that's one of the reasons I find the whole kind of generation rent slogan so enormously unhelpful, right? Which is the whole idea of generation rent is like, oh, this poor generation of people doomed to renting just reinforces the notion that renting is this kind of subhuman means of existence, which just makes the problem even worse. But how's that done? I mean, I think that both the most effective way economically and maybe the most kind of tolerable way politically would be a policy or a set of policies that limit the ability of asset owners to realize gains without making any investment of any type. Essentially limiting or getting rid of rentier gains of one type or another, whether you're an owner occupier or a landlord. And obviously in the landlord space, that might mean some type of rent control. It was interesting to hear Sebastian's thoughts on that. You know, the UK is an extreme there. Even the US, something like 200 cities in the US have rent controls of some form or another, whereas the UK has none. But more broadly, you know, as you've written about before, Josh, land value taxes is the obvious way of limiting the ability to realize unearned increments, if you want to use that terminology. The problem, obviously, though, is the political difficulty of that, and that, you know, the politics is the reason why nothing's ever come of that in most countries. It's not the economics of it. And I guess the only thing I would add there is that it's to something that Sebastian said earlier, which is that, you know, the political support for home ownership is not just about the fact that the median voter in lots of these countries has become a home owner. It's to a significant extent also about the different voting behaviours of homeowners versus renters. I mean, some of the starkest divides in voting behaviour in the UK, but not only the UK, are between homeowners and renters. And that's not just about who they vote for, but it's about whether they even vote. You know, if you look at any age bracket in the UK, the difference in the proportion who do vote and don't vote between owners and renters is bigger than 20% at every age bracket. So I think when I last looked, I think for 40-year-olds within the UK, in the 2019 general election, fewer than 50% of 40-year-old renters voted, whereas over 70, I think around 75% of 40-year-old owners voted. And given those differences, there is no political party that is certainly going to platform on doing something about bringing down prices, or to do that when they're actually in power. You know, the only way that I could see that ever changing is if Leilani's private equity buyers buy up so much housing that home ownership rates drop below, 50%. and then people might begin to take notice. But while they're 60, 65% and above, and while voting behavior looks like it does, my own sense is that nothing is going to be done about it, sadly.
Interestingly, in London, the percentage of homeowners has just dropped below 50%, but I don't think there's probably not enough private renters to form a majority yet. Sebastian, did you want to comment on any of what Brett's just talked about there on sort of the political economy of renting? Is there anything to add?
Yes, I think one aspect is also financial stability, right, which sort of presupposes stable house prices and house price increases. Is it true? I mean, Melanie just talked about it, and Moritz Schollerik showed this with data. If it is true that banks' business now shifted from business loans to mortgage loans, then paying back these mortgage loans is essential for macroeconomic stability. And if basically now incoming generations do not support ever higher prices collapse, then there's a risk that many mortgages won't be paid back. I also wanted
sorry to interrupt, Sebastian, but you've done some interesting work on different types of mortgage system and how some countries like Germany have a slightly different, and Denmark, I think, is another interesting example, have a slightly different model of mortgage finance, which perhaps reduces instability. Could you just quickly elaborate on that? It's quite interesting, and then I think we'll move to the Q&A.
Yes, so I think the key term here is the covered bond, which is a financial instrument invented, I mean, already in the 18th century, but which basically became the main instrument of continental mortgage banks to finance urbanization in the 19th century. And geographically, this emerged sort of in Prussia, also in Paris under Haussmann, but also in the Scandinavian German-speaking countries. And this is opposed to the building societies you've had in the UK, or the savings and loans in the United States. And in these Anglophone countries, bond-based mortgage systems, as we all know it, like this, the mortgage-backed securities, MBS, emerged very late, right, in the New Deal legislation, right? And these MBS are usually taken as responsible for the Great Crash, 2007-2008, and they only made inroads into Europe where covered bonds didn't exist as an institution. The main difference between the two being that it basically covered bonds issuing mortgage banks keeps the mortgages on the balance sheets, so to monitor a mortgage lending, which is different from this NDS system, which for this reason might be more unstable.
So just to be clear, with the covered bonds, the bank issues the mortgage, but then essentially the risk is kept on the bank's balance sheet, which means it sort of takes more care in the quality of the mortgage, and it pays more attention to the riskiness of the borrower. Whereas with mortgage-backed securities, banks are able to sell packages of mortgages to institutional investors and move that risk off the balance sheet, which makes them more risk-oriented, as it were.
Right, and I mean the covered bond system also allows a great financialization of housing, if you want. So some of the most mortgage indebted nations are covered bond nations, Denmark, Scandinavian countries, but also Germany.
But you think nevertheless that there's less risk of financial instability there, or not?
I think the Danish financial system, including the mortgage system, has been one of the most stable over time, despite more than 100% mortgage indebtedness per GDP.
Good. Okay, thanks for that. To all of you for that conversation. We've got some great questions here in the chat, and some real housing experts throwing them in. So I'm going to turn to the audience. I'm going to start off with a question from Carol Wilcox, who asks, how far, what I'll do actually is I'm going to read out a couple of questions and then I'll ask the panel to take them. So I'll take three initially. Carol says, how far would substantially shifting the tax burden off economically productive activities and onto land and property mitigate the problem we've been talking about? So that's an opportunity, I guess, to go into the land value tax argument that Brett briefly mentioned. Got another question here on the Netherlands from Joost. I'm not going to try and pronounce the surname, sorry, but Joost. In my country, ownership is a very normal way to build capital for families. Why is this now seen as a problem? I see it very differently. It helps a lot to secure your own future independently from a landlord. And then I'll take one more question in this first round. This is Michael Berry, and he asks about weak tenancy conditions and government motivations to sustain these conditions. One, if the insecurity that residential tenancies, i.e. short-hold tenancies without security of tenure, afforded the pandemic has led to an increase in the demands for home ownership and thus prices. So has that led to an increase in the demand? And two, do governments reliant on home ownership to sustain the economy seek to benefit from unstable, insecure rental markets and weak rental regulation? So who would like to take the first question from Carol? Who would like to elaborate on the shifting tax off incomes and production, presumably firms, and on to land rents? Any volunteers? Yeah, Sebastian.
I think that this is a very fascinating idea. And when you read Henry George, one of the best-selling books, right, in the 19th century about poverty and progress, then there was one central idea to just tax the unproductive activities and leave the productive activities untaxed. I looked a bit into realizations of this Georgian ideas because, for instance, in Germany, there was a very strong land reform movement that tried really to get a hold of policies to implement this. And it was used in German municipalities prior to World War I. There was even a national tax on the unearned increment, right? So basically, the share of the land price increase that was not earned and was supposed to be taxed to be given back to the community. And the upshot of all of these attempts was that it was very complicated to realize administratively. Because just imagine how you would define the exact value that corresponds to this unearned increment. And as a result of also these failed attempts, basically there was no further such land tax, even though there were conservative majorities also in favor of it. The interesting thing about the land tax is that conservatives and liberals can actually very much agree on it, and center-left parties, of course, as well.
And nearly all economists as well.
Right. Some of the staunchest liberals of, market liberals of the 19th century, such as John Stuart Mill or also Herbert Spencer, were in favor of land reform. So I find it even puzzling that it hasn't been properly implemented.
Yeah. Leilani, is greater, higher levels of property tax or tax on the increasing value of land something that you looked at all when you were at the UN?
Not really, but I did look at how taxation was being used or is being used in different jurisdictions to deal with financialization of housing. And it is used in different ways. So you see in some jurisdictions a very high tax for foreign owners if they want to try and buy property in Singapore, let's say, I think it's Singapore, there's a 15% tax for foreign owners. New Zealand tried to introduce that when Prime Minister Ardern was first elected. You see taxes being imposed on vacant homes in some places. The question is efficacy. You know, we found, like in Singapore, they still have a very high level of foreign investment, even though they've got this 15% tax. So is that useful? No, you know, doesn't seem to be. In British Columbia, in Vancouver, the city of Vancouver, they have a 1% vacant homes tax, and that has proved useful. How you define vacant becomes an issue, et cetera. But that money that's been generated has been quite substantial, and it's gone right back into the creation of affordable housing. So it's sort of mixed. But one of the things I loved about the question was it assumed that it's understood and accepted that investment in property is unproductive. And that's actually debated. I mean, when I've met with ministers of finance in countries around the world, I was saying to them as rapporteur, excuse me, why are you allowing all of this money to be poured into housing in this way? It's unproductive money. And they would argue with me that it is productive, that it's somehow productive for their economy. You know, it's a sort of trickle, this idea of trickling down, et cetera. So I love the question from that point of view.
Okay. Good. Okay, I'm going to move us on to another question here, specifically on the Danish housing market. And not sure who asked this question, but it's the name of this is called the Andelsbolig system, which we have in Denmark. In fact, maybe this question is from Rosie. It's a form of cooperative where buyers don't buy the property, but a share in the company that owns the property. It's a historic system with many interesting problems, especially with regards to how the boards of some housing cooperatives have financed developments. For example, through some dodgy debt swaps. I mean, that's the type of tenure we haven't really talked about yet, is actually cooperative housing models, which have been quite successful in some countries. I think Switzerland has quite a large cooperative housing sector. Is there a kind of third way here between, you know, just public housing and private market housing that is viable? Brett, do you want to take that one initially?
I was scared you would say that. I don't really know anything about the Danish housing system. What I do know is that, you know, here in Sweden we have bostadsrätt, which is often referred to as cooperative housing, which structurally I think sounds similar to what Rosie was mentioning in the Danish context. So here in Sweden, if you have a bostadsrätt, you own a share of the cooperative that owns the properties rather than owning the property itself, and that share gives you the exclusive right to live in that particular property and also to sell your share at a later date. I mean, all I can say about the Swedish context is the problem is that system in Sweden has essentially become the same as owner occupation. It's only different in name, and the reason for that is that I think until 1968, the rules were that the price at which those shares were exchanged when you sold your property, when you sold your share, were set by a rent tribunal, which I think was based upon historic cost, I think. But basically from 1968, it was liberalized and prices became set by the market, and essentially bostadsrätt became exactly the same as owner occupation. But I don't know whether in the Danish context, I suspect from the fact that Rosie asked the question, that maybe the same degree of marketization of that tenure form hasn't happened in Denmark. Sebastian, I'm guessing, might know the answer. He tends to know answers to these types of questions.
Sebastian,
Yes, so basically there are two types of cooperatives. So the ones in the Scandinavian countries, and this Andelsbolig, I think, is similar. In Norway is also similar very much. Was initially introduced as a third way, if you want, where the owners of the cooperative pool their capital to basically collectively provide themselves with their own housing. And initially, the resale price of the shares was really controlled, such that it didn't participate in the house price increases. It was basically an insulated part of the urbanizing cities in the Nordic countries. But as Brett told, I mean, that was liberalized in '68 in Sweden, in Denmark, also in Norway, sometimes actually because the sitting owners wanted to liberalize it to sell their own shares at a higher price. So it wasn't like a top-down sort of liberalization necessarily. Yeah, nowadays I would say it's very much comparable to condominium-like arrangements in other countries. The second type of cooperative, that is more the Swiss case, for instance. So Zurich is a big case in point, and also other German-speaking countries, and they have these tenant cooperatives. So they are basically, when you become a member of the cooperative, you just pay like 3 rents or so. So it's not at all a share similar to a condo price. And then the cooperative acts in a way like a socially oriented landlord. And they make up about 6% of total stock in Germany. In a city like Zurich, it's a double-digit number. And I think they are a third way, whereas I think the Nordic owner cooperatives, as Brett said, basically driving prices also as other housing units in home ownership.
Yeah, it's interesting as well in the UK how the housing associations have sort of become quite marketized in a similar sort of way. It seems it's quite hard to avoid this rentierization or financialization process. We've got a couple of interesting questions on the role of central banks, which Leilani mentioned earlier on, actually. A very interesting development has been that the New Zealand central bank, possibly worried about the 22% increase in house prices over the last year, has become the first ever central bank to require the central bank, the government has required the central bank to incorporate house price growth in its monetary policy decision-making and its mandate for monetary policy. Interestingly, New Zealand was also the first central bank to introduce first country to introduce independent central banks way back in the 1990s. But I suppose the question here is, what should central banks be doing differently to deal with the house price affordability crisis? Leilani talked about quantitative easing, pushing up house prices. There's another sort of follow-up question here, talking about central bank digital currency, which many central banks are now actively looking at. Could central banks make mortgage loans? Could we sort of socialize mortgage lending? That is another way forward, quite a radical step. But Leilani, did you want to come in on this type of discussion?
Yeah, well, I took a different approach when I was trying to figure out, I've been working on a set of human rights directives on the financialization of housing. So what does human rights have to say about all the areas in which financialization has emerged? And one of the things I started to look at was the role of central banks. And people on this webinar have to understand I'm a human rights lawyer. I'm not even like a housing person in the way that maybe the other panelists are more housing oriented than I am. I really am a human rights lawyer. And so I don't understand all this stuff. What I ended up figuring out was that it's not necessarily always bad to have low interest rates, but it can be very bad for housing. So sometimes you want low interest rates if that means that businesses are going to take out loans and use them to grow and to create more jobs, and jobs that pay well and that provide pensions and that kind of thing. That's not actually what happens, but that would be like, kind of not a bad thing to have low interest rates for entrepreneurs or, you know, whatever. But what of course happens when you have low interest rates is you've got the folks with dry powder, as they say, a ton of dry powder, which is just money, the private equity firms, the pension funds, et cetera, and they then use those low interest rates. I started trying to toy with the idea of having a better interaction between monetary policy and fiscal policy, and that you might be able to curb what happens with monetary policy through good fiscal policy. You know, so what would good fiscal policy look like? Well, in my area, it would look like, I actually don't think that private equity should be allowed to purchase residential real estate. I don't think that en masse purchases should be allowed, period. If you look at where financialization is going, I've mentioned some of the things, but look at the United States. If you saw Sebastian's charts, you'll see the United States has no social housing. I think there are 3 states that still have some semblance of social housing: New Jersey, the District of Columbia, and I don't know, Missouri or something like that. It's been privatized everywhere. And so the most affordable housing for very low income Americans are these mobile homes and manufactured homes. And those are being purchased by private equity en masse, hundreds and hundreds of units en masse. So there's things that fiscal policy could do. We could have fiscal policy take away the tax breaks that real estate investment trusts get. And real estate investment trusts are an instrument used to buy multifamily dwellings and single family dwellings en masse. And so if you did those 2 things with fiscal policy, those low interest rates might not have quite as bad an effect, at least on rental accommodation or the flipping of single family homes to rental accommodation. But the other experts probably have much better ideas than I do.
Brett, I mean, you've written a little bit about the role of monetary policy in contributing to this kind of rentier capitalism. I mean, there is one argument that says actually central banks, perhaps better than governments, you know, they're better placed because of their independence to take a longer term view on some of these issues. I mean, do you think that there's anything in that central banks could play a role here, or does their lack of democratic scrutiny mean they're the wrong actors to be, you know, taking part in this?
I think that I can totally understand why what's happened in New Zealand has happened. I mean, for reasons that I think have come up during the discussion so far, I think you would have to say that the housing system and its kind of intimate entangling with the financial system, maybe alongside climate change, probably represents the biggest existing threat to financial stability in many countries. And therefore, given that central banks have increasingly taken on financial stability mandates since the financial crisis, I think it's completely understandable that house prices and house price growth are being looked at closely by central banks. I think central banks are on a bit of a hiding to nothing, actually. I think they're stuck between a rock and a hard place. I think that in their quiet moments, central bankers must be dreading the sustained uptick in inflation that lots of people are warning about, because, you know, I know that central banks have said, or at least some of them have said, we'll be willing to tolerate rates of inflation above 2% for a limited period of time. But I don't think they're going to be willing to tolerate rates of inflation above 2% for much time. And if the only response they have to that is to increase interest rates, and if they have to increase interest rates materially, I find it very hard to see anything but kind of Armageddon in housing markets in places like the UK and Sweden and other places. I mean, where I am in Sweden, as I think Sebastian hinted at earlier, you know, levels of mortgage debt they are sky high at the moment in relation to incomes. And the only reason that the housing market hasn't completely crashed is because people are paying no interest essentially on their mortgages. And if interest rates were to go up to even to, to 2% or 2.5%, that would have I cannot see that it would not have a catastrophic effect on house prices. Or alternatively, if you think another way of looking at it is a very beneficial effect on house prices in terms of they would collapse. I can't see anything right. So I think central bankers must be dreading inflation for many reasons, but I think that's probably the main reason they will be dreading inflation, because if they have to increase interest rates, I think that, would have a huge effect. It's been so long now since mortgage borrowers in places like the UK, the US, much of continental Europe have had to contend with interest rates anything like those that people were accustomed to prior to the 2000s.
Sebastian, would you agree with it's a bad situation for central banks, or are there things that they could do? There is macroprudential policy as the sort of new tool in town.
I'm not really an expert on central banks. I think one key issue is to keep quantitative easing from only flowing in unproductive house price increases, and there should be some sort of earmarking of central bank money. Perhaps another issue that I wanted to mention, because the rentier or the rentier, right, has received sort of bad comments from Brett and Leilani also. I just wanted to mention that most of, let's say, the countries in the global north, but also Asia, is facing very unsustainable public pensions. And I think that the private housing market could be a way actually to solve the pension problem in one way. Traditionally, most cities in Europe across centuries were tenant cities, and the young population has sort of paid the old, if you want, and was providing a sort of pension. So the only problem is, of course, if in this process of young private tenants paying basically a private pension to their landlords, who are older, if that sort of gets intermediated by a financial player that sucks out money out of the process. But I just wanted to point also to the social function that a private rental sector, or also a social rental sector, could have in developing another pension pillar. It just needs to be properly regulated.
Leilani, there's also a question on this point, sort of saying, yeah, okay, private equity seems to be bad news, but could institutional investors, pension funds, or insurance companies maybe, who are kind of more focused on the safety of those assets and perhaps a bit less worried about double-digit returns on equity and high short-term returns, could they play a more productive role in the housing market?
Absolutely. And I think that's what Sebastian was getting at. And I think if you look at some of the big pension funds, historically, they did actually invest in social housing, in cooperatives in Latin America, for example. And there is a history there that I should probably research more, but that could be mined as well to sort of introduce that idea. There's even, when I said, you should get rid of the tax advantages for REITs, I do know that I think in the UK, there is a sort of a social oriented REIT. So I should have been actually a little more finessed, because I think you could maybe keep the REIT structure, but only where you could prove that the REIT that was being established was investing in housing as a social good, or even social housing. I just want to say one thing, and I think we're almost at time, but I wanted to say, just to problematize a little bit around home ownership a little bit more, to say one of the things that I've been struck by in the US and Canada, for example, is when governments, and in fact central banks and banks, start clamping down on who can own homes and start talking about rental accommodation as a better alternative for, let's say, lower income households. What irritates me a little bit is, and I think I get to a roadblock. I don't know where to go with this, but I'll just put it out there. What irritates me is that for some time now, certainly in the neoliberal era, but even before that, those with race and class privilege and gender privilege often have benefited intergenerationally through home ownership and land and the ownership of land. And if we cut that off as a means of intergenerational wealth and security, there need to be other means of ensuring intergenerational wealth and security. And so it worries me when governments like my own in Canada, we now have a new stress test for getting a loan on a house. And so interest rates, let's say, are at 1%, really low. But in order to pass the stress test, you have to be able to afford the mortgage payments on a home at 3 or 4%, right? So in case interest rates go up. And so that's going to mean that a whole swath of our population who might be racialized, Indigenous, women, sole-led, single-led families, persons with disabilities who could just get into the housing market right now, maybe could just, because of low interest rates, can't.
Yeah.
But then what's the alternative? How will they create that kind of security for their families? And that's one of the questions you had asked us that question earlier. And I thought that's important to pick up on. And I'm not saying that I'm wedded to home ownership for intergenerational wealth or security. I'm only saying we need to make people feel secure. So governments have to be creative and yes, don't count only on home ownership, but what are the alternatives?
Yeah, that's a really good point. Brett, I'm going to give you the final word. Would your response to that challenge from Leilani be, we just governments need to rediscover the ambition of public house building and a much bigger public home building program?
Well, I think that's for sure, that's true. I think Leilani's comment actually connected to one of the very first questions that we didn't answer, which was the question around, someone said, well, I think it was in the Netherlands, said, well, it's totally normal here to want to buy housing as a means of long-term family security, and what's wrong with that? And I guess the answer to that, there's absolutely, of course, there's nothing wrong with that at all. I think what the problem is not wanting that security and seeing home ownership as a means to securing that security. I think the question to be asked is why people see that as the only route to security. What's changed in our political economies that people see no other route to that, in terms of welfare provision, in terms of proper pensions provided by the state, and to see that the government's essentially encouraging people to pursue what's often called asset-based welfare is not leading to good consequences. It's leading to massive increases in both wealth and income inequality within and across generations as well. If you look in the UK, the people that have that security, that have one or two buy-to-let properties, are also attend 90% of the time or more to be people that are also at the top end of the employment income distribution, and the people that are paying their rent are the people at the very bottom of the income distribution. So the housing market, by hook or by crook, has become kind of a vehicle for the exacerbation of existing inequalities within and across generations, and that's not good. So the problem is not wanting something. For me, that none of this is a moral critique. The problem is the political economy of why it's become so problematic.
Brilliant. Thank you so much for such an interesting and deep discussion of these very complicated issues. Thanks, Sebastian. Thanks, Brett. And thanks, Leilani. I hope all three of you continue to do fantastic research and activism in this area. And thanks to the audience for joining us and for such great questions. Just to say that the recording of this talk, in case any of you join late, will be uploaded and available on YouTube next week. And the next talk, the next WAWA talk in our series, will be on digital feudalism, the future of data capitalism. That's on Wednesday, the 30th of June at 5:30 p.m. And that will be chaired by Mariana Mazzucato, Director of IIPP, and she'll be joined by Shoshana Zuboff, the author of The Age of Surveillance Capitalism, and Tim O'Reilly of O'Reilly Media. Thanks so much, and good luck to everyone in dealing with the global housing crisis. Thank you.
Thanks, Josh. Bye, everyone.